Okay, I promised that I would actually do a live stream this morning. This is the first one. Um, so last night I said that there would possibly be a correction in the overnight futures market, and that's kind of what we're seeing right now. And I'm a big fan of using these Camarilla pivots to decide when and where the correction actually is. And it looks like on all four of the Dow Jones, let's go to these, S&P 500 futures, all of them are hitting this Camarilla S4 level. And Russell 2000 futures actually exhibited a deeper pullback starting yesterday. They kind of showed more weakness ahead of the rest of the indexes. So I anticipate that this may continue. We had such a tight channel for this rebound that started last Friday, when the fears of the coronavirus were kind of at its peak, and that was right here at the bottom on that Friday right here. And then kind of, we got notifications that the PBOC was actually intervening with something like 400 billion. And I thought that this correction could last a couple of days longer, because this particular correction time frame is something that happens maybe, I would say, somewhere between 50 and one half to 2/3 of the time. This correction happens from late January to early February. In this case was about 14 days long for Russell 2000. I think it was 9 days long for from top to bottom for Dow Jones futures. So and then after that, you kind of go up the rest of the second quarter, all the way up until, I think, oh no, is it the first fiscal quarter, all the way up until April or May timeframe. And in election years, this seems to be more pronounced. So we were waiting for, at least I was waiting for, a deeper pullback in the markets in order to go long. I wanted something around this level, this January 24 close level. But we didn't quite get there. So I keep showing these ATR stops, and I'm a huge fan of these guys. This ATR stop for the day and for the 4-hour level. And this is another big buy zone to actually look for. So we also looked at bonds, 30-year bonds. And there was an idea that I had, let's see, about a week or two ago, about the possibility for bonds to break out, and this was right at the beginning of the coronavirus scare, I would say, but the media has completely hyped it up. It's terrible, but the media is completely hyping it up, and they milked it for all it was worth in order to move the markets down. And we got a lot of dark pool selling and ETFs like SPY and QQQ. And I thought that we could reach this Camarilla R3 level that was the year R3 actually. And this little guy right here that I have annotated called Opening Week Trump Election, that was the very start of November 2016, the week of that election, where 30-year bonds actually were placed, 30-year bond futures. So we actually did get that target after that, and we completely jumped. This was that same January 24 close right here, where we jumped and had a big sell-off on that Monday, and then the bonds are trying to come back. So I thought that after filling this January 24 close gap, that it was very possible that we could have some kind of a bounce, and we did have a meaningful bounce here. This is a nice, at least $1 bounce, and it is also possible that we are forming some kind of a head and shoulders right here. So this is the real buy opportunity that I'm looking for out of that February correction that only lasts for about usually 7 to 10 days for S&P 500 or Dow Jones. Last week of January into the first week of February. This might be the best buying opportunity to get into a nice big third wave long. And if this corrects the way that I think it's going to correct, then it's going to provide a big opportunity to actually get into some nice longs that we can hold for maybe 30 days or more. So I was just completely unprepared for the magnitude of this move right here. For this to just to completely go straight up and in a very tight channel and not have any kind of pullback. They weren't letting anybody in on this trade. So I think that we also have, if I turn on this gap trader tool, and I've got this other guy. Actually, I'll take this off. Let me look back in the so these level 4 daily pivots, I think that we can actually make it back to the previous close, which is right in the middle of all these these symbols. I can actually show it. These white lines right in the middle of these daily Camarilla pivots, there's a very good chance that by the end of the session today we can actually make it to these previous closes. I don't know if we can actually come down and maybe do a further correction. This area right here is my buy zone, this 3320 level right on top of this H4 4-hour ATR stop. That's kind of where I want to look for a buy, and then just hold this trade for a while and see what happens. So the play this morning is probably I will think about just buying the open immediately and getting back to this previous close. If not, if I can get a further correction down, that would be nice. UJ is also doing similar things to bonds. It had that pullback with bonds, so we just looked at that bond. We just looked at the bonds pull back up. UJ is kind of related to bonds in some way. It's a safe haven asset a little bit, and it correlates to 30-year bonds sometimes. Not all the time, but it does an okay job. It used to be more pronounced, especially with gold. Gold absolutely died off of this. It had a 2-day sell-off with the yen. So this pullback right here, I bought in the first time at this level 4 Camarilla pivot, this guy right there. I bought the first lot that I actually wanted. I'm not doing that much on this trade. I bought one lot here. And then this morning when I saw the 4-hour chart, that there is a nice big hammer forming, and I think that this has legs to go a lot higher. I think that we can at least do something like this and match the January move. Oops, not that one. I think we can get the height of that January move from January 7th to the 16th. I think we can double that and do the same thing. Get up to this area. So this 110 area. Somewhere around there. And that would create something like this. Like that. This seems very reasonable to me. And bond seasonality from now until March, April is similar to stocks, but the inverse. People buy stocks. It's a risk-on environment, and they're holding through the second strongest time of the year. The first strongest time of the year is during the third quarter, fiscal quarter, I think, all the way to December. So it's about October, November timeframe, usually later October, early November, all the way through January is a very strong time of the year, and then you get that Santa rally at the end. Okay. All right, good luck. I'm still buying. I will buy if it comes down here even a little bit more. NASDAQ is the strongest right now, and I think it'll continue to be the strongest. It had an absolute killer rally and never even made a new low on that Friday when all the other indexes had a 2% down day. NASDAQ also had a horrible down day, but it just ended up right where it started kind of on Thursday. So it wasn't incredibly bad, and then regained everything on Monday and through the rest of the week. So if there's some more sideways movement down here for NASDAQ, maybe around from this 93.30 level to maybe 93.40 level, somewhere in here, I would like, if there is a pullback in here, I think that this is actually a good place to buy. And then we can hold this for a month and just ride out the seasonality pattern. Okay?